Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. We've had a little bit of volatility in the markets today as the dollar has gained strength across the board in Asian, European, and in New York trading. This has pushed many of the pairs through important levels that has contained them over the last few weeks. It hasn't been any significant breakouts, but it has taken a few pairs out of the monotonous ranges they have been drifting along in. Let's take a look first at the Euro USD, because as we spoke about yesterday, the pair has been entrenched in between the fib levels that from the recent move down between the 0.618 fib at 130.30 and the 0.382 fib at 129.44. The pair managed to squeeze squeeze below the fib level in New York trading, and let's go into a 4-hour chart, and now has firmly established itself below this trend, below these fib levels, and we could be looking for a move down to 128.20. At 128.20 though, if you look on a daily chart, there is significant support there at that level that could cause the pair to bounce. What we have there is the 200-day moving average that has capped the price action a few times, 1, 2, 3, 4 times in the past. So if we get down to this level, we could see a bounce off it, but if we do break below, we could be on our ways to test the fib levels from the recent high move higher in September, starting with the 0.382 fib at 127.40 and the 50 fib at 126.10. The next pair I want to look at is the Great Britain Pound USD, because you can see the Great Britain Pound USD broke below the first target that we had initially for any move below this descending trend line that has capped the price, which acted as resistance in the price action up until early last month when the pair moved through it, and now it's acting as it was trying to act as support heading in, but the pair broke through the level to start the week out, and now the pair has hit the first target that we had established for any breakthrough below that level at around the 0.382 fib from the move higher at 159.99. Now if the pair can remain below this level, the easy target would be the 50 fib from the same move higher at 159.03. So you have to watch the price action around the 0.382 fib and see if we remain below that, and we could see a push even lower towards the 50 fib. The last pair I want to take a look at is the Aussie USD, just because as we can see, the Aussie pushed down, had attempted to bounce off from the beginning of the week, had attempted to bounce from the very bottom of its resistance level at 101.75. If we look at this chart on a daily chart, you can see that this is the level that has capped any move lowers over the last three months, and it has capped the price action not once, twice, but now it's attempting to do it for a third time. And the pair did move down to the 101.50 level, so we have a resistance zone between 101.50 and 101.75. Any move back below this level could open the cross up for initial test of 101, then down to parity. If the pair does gain a little bit of traction here though and bounce once again, the first real lessons of level of resistance is the short-term highs around 102.70. The news flow out of Europe and Asia is actually relatively quiet once again this evening, so the fundamentals will be key, and watch for any unexpected news out of Europe, because they could always turn things on a dime over there. Alright everybody, have a good day trading, and this is Chris Keene from A Keen Point of View, and this is Currency Watch.